Okay, well, seeing as this is a Saturday morning, and I have been doing webinars on Saturday mornings, I thought this would be a good opportunity to test out live stream capability. So I'll be monitoring the chat, and I see that Paul has already used the chat, so that's good. That seems to be working. I know there's a delay from when I speak to when it's broadcast out onto the live stream page. So, and that's probably about 10-second delay. But let's just see how we get on. This will actually be automatically recorded by YouTube because it's live streamed through YouTube. You can watch this either on the YouTube channel or even you can watch it on the EdgeRater live page. If you go to edgerater.com and if you go to pages, live broadcast, you'll see the on there here. You can just hit play, and I believe that will then start you at the beginning of the stream, or maybe it will put you live in the stream. Probably puts you live in the stream, but you can always rewind and go back to the beginning if needed. Anyway, so what I thought I would do is just really play around here with EdgeRater. Might be quite quick. I'm still monitoring the chat, so I can see Paul is still hearing me, hopefully. Okay, so last week I talked about how you can test indicators to see if they have any relevance to price movement. And I did that by taking a stock or a set of stocks and getting the daily percent change for each of those stocks and putting that into a list. And then alongside those, putting various indicator values. And then doing a Monte Carlo analysis to see if the indicators had any relevance to that movement in price. So I think the indicators that we looked at last week, we looked at the seasonality, just running by day of week, month, year, trading day of month, and that kind of thing. So that's one kind of indicator, a seasonal type indicator. What else? The first thing we did though was not that. The first thing we did was, of course, the moving averages. That was the whole point of the presentation, to find out whether moving averages or the price in relation to a moving average has any bearing on what happens next, in the next one day. And then I thought this would be a really good example because this is now, you can actually break the market down. I went to a presentation in Vegas a few years ago, and this was a presentation given by Larry Williams. And he basically talked about the different types of bars that you can have. There aren't that many when you break it down like this. So after that, I produced a template which looked at those bars and did some backtesting, which was very much a manual process. And I realize now with the new capabilities that we can actually do this testing on these range types using the software in the similar way to the way I did last week with the Monte Carloing and the day-by-day thing. So first of all, let's talk about range types. If you can see the screen here, you've got basically 8 possibilities of how 2 bars can appear. So the first one, if you can see on your screen there, might be kind of small. I might be able to zoom in. No, maybe not. Let me see if I can zoom in here. There we go. Okay, so So when you have two bars, only two bars, they can be arranged in these possible ways. You've got the first bar, which is a downrange down day. So it's downrange because the current bar goes below the prior bar's range. And it's a down day because it closed lower than the prior close. So then you have a downrange up day. So the range went lower than the prior day, but it closed above the prior close. Okay, and then so that's a pair essentially of downrange bars. That's the only two possibilities you can have. Actually, there's a third one, which is where the close price is equal to the prior close, but they're not called out here. There's only a handful of cases like that, but it's useful to break those out too. Then you have the similar thing for the uprange, where you've got an uprange bar for the current bar with a down close, an uprange with an up close. Then you have an inside range where the current bar is completely inside the prior bar with a down close or with an up close. And then you have an outside range where the high is higher than the prior bar, the low is lower than the prior bar, and then you've got the down close and the up close version of that. So there's only 8 possible types, but if you add in the equal closes, you add another 4 into there, so you've got 12 possible types of ranges that you can have in or 12 possible types of two bar. When you put two bars together, you can have 12 possible cases. So I thought it would be interesting to go and see if we can determine what's more likely to happen when you when you see one of these types of bars. So the idea then would be you can look at your current bar in any stock and say, oh, this was a downrange down day, then what's the likelihood for tomorrow? Is it likely to be up tomorrow or down? Does it have any bearing at all? Or is it just random? So that's the kind of thing that I thought would be interesting to take a look at. Okay, so what we have to do then is take a look at how to set this up. And what I'll do is I'll run this only on the S&P 100, the list of 100 stocks. Obviously, that is not a lot of stocks, but it's a set of big cap stocks. Everyone's heard of all of these. It doesn't include any ETFs; they're just stocks. So we'd be interested to see on stocks. Now you can run this on any list. You could run it on all securities, but is that really interesting? Bearing in mind that contains ETFs and extremely low price penny stocks and mega caps as well. So it's a good idea to, if you're thinking of trying to find an edge in any technique, is to do some testing on the set of stocks that you might actually be trading. So so the S&P 100 is the list I'm choosing here. So then the way to work this is to run a simulation. We'll go to the trade simulation. Okay, trade simulation batch run. And the first thing to do is just to get the daily returns from all of these stocks. And we will just, I'm going to here for this example, not override the dates. So the dates that are available in my list are going to be used. So that's 10 years of data for 100 stocks. And I'm just going to now, because I have by default, when you go to the trade simulation batch run template, the default is that the sim daily returns configuration is going to be run. So it's daily returns. So I'll just hit run on there. And that will process the 3 different cases of daily returns. One is the close to close returns, one is the close to open returns, and one is the open to close returns. So once it's gone through those for 10 years, it's going to come up with the result. Now it's taken a time to calculate that on this computer. So while it's doing that, I'll just check out some more of this live stream software to see that everything's working okay. And look at the chat. So yeah, we've got some chats going on. Now I can't see, so if somebody's just got, obviously if they've just got a username in YouTube, then that's all I'll see. Paul Reike, you have your full name in there, so that's easy for me to know who that is. And then MN Fani, hello, and that's the username comes up for you. Now I didn't advertise that I was going to do this live stream today, so it really is a test. And the fact that you're here means that you probably are subscribed to the channel and you've got notifications turned on, so you were notified about this stream. Hope you're all having a great morning so far. And so I'm currently in the UK, and it is now just after 5 p.m. And actually today has been quite a nice day weather-wise. Okay, so now we've finished processing this, and we can see that we've got. So if we're taking just purely the S&P 100 over 10 years, the close-to-close prices, we can see that the close-to-close had an average percent of 0.07, an average return of 0.07%. The close-to-open had an average return of 0.05%, and the open-to-close had an average return of 0.02%. And that's similar to last week, because this is exactly the same run when you're doing the daily returns. You find that it's the money is made overnight. As somebody said last week, as Phil said last week, that he'd heard from Larry Connors, I believe, you're paid to hold overnight. So in general, that bears out here. Okay, so having run that, and I did not change the output location, so all this data went into the folder My Trade Simulation 1. Okay, now what I can do here is go into the file system, go to the reports folder, and go to it's now created this My Trade Simulation 1 folder, and I can see there's several files in there because on July the 30th, I had also run this, and I put the output in the same folder. So these are the files that I'm interested in, these latest ones. And I'm really only interested in this close-to-close file. Just to show you what that is, it's always interesting to look at these trades. It's a series of, I've just actually asked to open this up in Excel, so it might take a while because it's there are a lot of rows in this spreadsheet. But that will open up, hopefully. And then if I want to find out how many rows are in there exactly, we've got 246,000. So 250,000 rows in this spreadsheet. But Excel is pretty powerful, and it shouldn't have any trouble opening that up. There we go. So yeah, so this is basically day-to-day close price. The entry price is the close on one day, and then the exit price is the close on the following day. So basically, each one of these rows is a one-day trade, and then the P&L percent is the percentage gain on those days. And this is done for every single stock in the list. So for if I expand this, you might be able to see it a little clearer. So yeah, so it starts on 8/6/2012, 10 years ago, and it does that for all 100 symbols in this list, and then it goes on to 8/7/2012, does it for the 100 symbols again, and so on and so forth. That's why we ended up with 250,000 rows in this table. So what we're going to do now is tag each of these rows to give it so that we know what the range type was for the row, for that particular bar. So the way that we do that is using this multi-factor trade analysis template. and we have to select a tag layout file that contains the settings for those range types. Now that's not something that's default in the system, and I'll show you what I've done to create that. Okay, if you go into your Edge Rater, so you go Documents, Edge Rater, and come down to Configuration, and then go to Tag Files. So I've added this range scans tag layout. I'll show you what that looks like. It's basically taking scans that are built into the system, downrange, downclose, uprange, upclose, etc., and giving them looking at the range converter then in here, we can find when you run that scan downrange, downclose, you're going to get a 1 value whenever the bar is downrange, downclose, and the range converter just converts that to if it's equal to a 1, it converts it to a yes. Okay, and each of these has its own tag name, shortened just so that we know we can identify what the range type is. And so what I'll do then is I'll just run that and we can see exactly how that works. Well, first of all, I have to select the tag layout file, so I'll go ahead and do that. That was in the tag files folder, and I'll just select range scans. So here's all the tags. And the combos, we're just doing a single combo for each one. And I'll just run that. I'll show you how what that looks like. I should select a trade simulation report to run it on. And I'll just select the one that I already showed you. So trade simulation, the daily returns, the one that I just created, sort them by date modified. So it's the close to close, 8/6/2022. So I'll select just that one and then hit run here. Okay, so what that's doing as we speak is it's going through 250,000 trades, identifying the type of bar for each one of those trades, each one of those days, because remember it's a daily trade list. So the type of bar it is, the range type, and it's going to produce a report with that in. So we have to wait for that to finish, and depending on how big a list that you ran this on, and how many years of data that you wanted to run it on will affect the time that it takes to produce this report. Now, this is a little bit off the cuff, this whole presentation, because up to about 10 minutes ago, or 10 minutes before I went live, I really wasn't sure that I would actually be coming on to do this. It was all a bit of an experiment, so this really is off the cuff. So we'll just see how it goes. Should be good. So you can see we're processing now at the bottom left of the screen. You've got it's processing these different combos. So it's going down through the list so for instance now it's doing combo 6. Combo 6 is the up equals. So it's now tagging everything. If it was an up range equal close, remember I added those extra equal closes in. Then it's going to put a yes next to that trade. We'll open up the trade list after this is done just to see how that tagged it, so you can get an idea for what exactly is happening here. So it's nearly finished. Coming down to the very last one, tag combo 12, which is the outrange equal close. And so it tagged it and then it produced the Monte Carlo result. But what I'll show is the actual tagging, because I think that's quite instructive. So if I click on any of these rows and I say open the linked document, it should open up the actual trade list file that I just showed, but it will now also include the tagging. Okay, so let's close the chart down. Well, we can keep the chart open for now because that will be instructive. So now this is the trade list that we saw previously, but as you can see, it's now got these tags, and okay, so for some reason, the very first set of trades here on day one doesn't have any tags. The reason for that is it's actually, when you think about this, is obvious after you think about it. You can't tag a bar. If the very first bar in this data snapshot is 8/7/2012, there is no range type there because you need a prior bar in order to determine whether that was a downrange, downclose, uprange, upclose, etc. So you actually need 2 bars before you can start to do that. So these yeses will not start coming in until you get to the second bar. Anyway, so now it's tagged each one of these. There should only be a single yes in the row. So 2 bars cannot have the, or 1 bar, one bar cannot have the same, cannot have 2 different types of range bar. So let's go and just take a look at the chart just to confirm what we're looking at. And I'll scroll down this list and pick some random ones in the middle here. And zoom my chart out, take a look at the annotation. So this is the bar that we're looking at. Okay, and in theory, this is supposed to be a downrange, downclose bar. So let's see, is this true? And zoom in a bit more. I'm not sure how good this appears on the streaming page, but I'll zoom in a little bit more for that. And so we can see, yeah, this was the bar where the entry was. Okay, so what was the range type for that bar? Well, if we look at the prior bar, we can see it was a downrange because the low was lower than the prior bar's low. The high was lower than the prior bar's high, and it was a down close because the close was lower than the prior bar's close. Okay, let's take another one that is supposed to be a uprange down close. Okay, so let's take a look at that. This is Apple. So on this bar was an uprange. The high was greater than the prior bar's high. The low was higher than the prior bar's low. And it was a down close. So it should be up, down. Yeah, you see the tag header here, up, down. Uprange with a down close. There aren't many of the equal closes, but there are some, which is why I added them in here. So if we find one of those, we just confirm, like here's one. Downrange, nope, that's not one. Now, of course, we can just sort these. Of course, there are 250,000 rows that are being sorted right now, but that should be fine. And if we go to the top of this list, there we go. So here's some downrange equal closes. Let's see if that is true. That one appears to be, because it said this is a downrange bar and the close was equal to the prior bar. Let's take another one. This was a downrange. So the one the bar that's being tagged is the entry bar. Okay, so this was a downrange for sure and an equal close because the close was equal to the prior bar. So we're looking at the entry bar and we're trying to determine if that has any effect on the next bar, so the exit. All right, so that's just an example of the tagging. You don't need to see the tagging, the actual tagging itself, but it's I think instructive when you're trying to get your head around this this multi-factor testing. So the important thing that's produced here is, if we go back to the other report, is the analysis, which is nice, kind of condensed all of that information into this one summary template here. Okay, and I do see some chats that, I'm sorry, I have to look over the other side of the screen to see the chats, but I will get to those questions in a minute. Okay, so here's the summary. I like to, as I said last week, sort this by the final equity value. And if this is your first time seeing the Monte Carlo results summary, then it would be a good idea to go back to last week's video and take a look at when we did the when I showed the testing on the moving averages, and I really went into detail about explaining what this is showing. So I won't go into too much detail about this today. So what is this showing? This is showing that tag combo 9, which is your in equal, had, and there aren't that many of those because this is an inside range equal close. Equal closes don't happen that frequently. So over 10 years in those 100 stocks, there were 307 of those cases. But those cases had 54% positive results. So after that, the bar after, 54% of those bars were positive with an average return of 0.13%. Now, if we go down to one of the more populous cases, we find that the downrange down day, okay, and there were 70,490 examples of downrange down days in that list of 100 stocks over 10 years. And 54% of those bars that started with a downrange down day, the next bar was positive 54% of the time. And 45% of the time they were negative, and the average return is 0.11%. So downrange down day bars in general were good. They had a 9.9% drawdown here when running this Monte Carlo simulation. And if we compare that to the all trades, this is the row right here. All trades takes all of the 100 stocks over the 10 years and just figures out what the average, when you Monte Carlo all of those together, what the average is there. There are 246,000 of those trades, as I mentioned before. So 1.03 is your final equity there with a 9.8%. So anything higher than 1.03 are better final equities. So these range bars, the best range bar, well, I think we can ignore the equal close bars because there are not that many of them. But the best bars, aside from that, are the downrange down close, and then after that, the in-range down close. The next one is, so we've got downrange down close here. The next one is the uprange down close. So down closes, there's a theme there, down closes tend to be better the following day. And then we'll come down to the next one. The next one happens to be the in-range down close. That's following the theme of down closes tending to be better. And then after that, we are on I guess I'm not looking at the whole list there. Okay. All right. So then the next one is interesting, this row here, because this is a blank. So this means because uprange up closes were actually the worst bars to say go long on for one day. Uprange up closes, not good. However, anything that's not an uprange up close, which is everything else, so encompasses a lot of the others, was actually 1, 2, 3, 4, 5, sixth on the list. So that's what the blank means. It's everything other than the condition that was tested with the yes. Okay. All right. So that's interesting. Now, I will have a look at some of the questions here, because I think really that's as far as I want to go with explaining this. I'll offer a few suggestions as to other things that can be tested alongside this that I think are interesting, but I'll see if there's any questions. So it's nice that some people were able to join here. Yeah, great. Okay, so there's a question. Is it possible to, oh, Paul, what folder is this in? I think I may have answered that probably after you type that. But yeah, is it the actual templates for doing the trade simulation are in the trade, and I'll call it a folder, but it's category, the trade simulation category for the batch run and the multi-factor analysis are in there. And then another question, is it possible to simulate buy at high to close or sell low to close? I'm not sure I understand that question. Is it possible to simulate, oh, okay. Is it possible to simulate buy at high to close or sell low to close? Buy at high to close. Okay, I'm not really understanding that. That sounds like some sort of short trading if you're buying to close, but I may not have got that correct. I'll keep watching the chat if you want to elaborate on that. Okay. Yeah, so what else would be good to test here? So remember at the very beginning I mentioned that this idea came from a presentation I heard Larry Williams do at Las Vegas Traders Expo. And after that presentation I did, in the hot topics category, you will find a Larry Williams range scan template, which simply will scan, I'll just run this on these bars here, which simply will do a very basic scan of current bars. Because we know that downrange down closes are good, maybe we want to see all of the downrange down closes. So currently on August the 5th, 2022, Apple had a downrange down close. Okay, downrange down close. We know that those are good bars to be trading. And all of these had downrange down closes. We know that the bars that are not so good to be trading are uprange up closes. So let's take a look at uprange up closes. And yesterday, Friday, we had, so Adobe was an uprange up close. American Express was an uprange up close. So we know statistically that these bars are not as good. Now, it doesn't mean every one of those bars is going to be worse. It's just they're not as good. If you were to choose from a bucket of each of these, which ones you would prefer to trade, it would be the downrange down closes in general. So a couple of other ideas for testing this that I would do myself would be to run these tags also with the day of week, and so you can find which days of the week in combination with the range type are good. You can also, if you go to the template that I mentioned, the range scan template, and hit template info, you'll come to the web page that I already showed, which is the blog post that I wrote about these particular range bars and the testing that I did back in the day when I had to do all of this kind of manually by entering into the entries and exits tabs and running trade simulations. This was the results that I found, and we're looking downrange down close was the one we've just found to be the better bars. And when I did this testing back in 2000 and let's see, when was this post made? This was 2015. So quite a few years ago. But yeah, back then, downrange down closes had a net profit, the highest of the net profits, average profit per trade. Um, but actually, the testing that I did back then was not just one bar to the next. The testing that Larry Williams did that he presented at the expo was taking an entry on any one of these range types, and then for the exit using the first profitable opening. So you might hold these for longer than 1 day. Just depends on when when the first profitable opening occurs. And then he also had a stop loss built in. So you either hit your stop loss or you get a profitable opening. And that's what these results are based on. But it still shows that the downrange down close were the best bars to be traded. But he tried to put that into a system, and that was a system he came up with. Buy the bar, downrange down close, and then you have a fixed stop loss, and then you also have a first profitable opening. But you can read this web page to find the results. He also did day of week testing on that too. What I would add, and I also put in here how I tested it with EdgeRater, and that was obviously the manual way of testing it. The way I've just done right now is a lot easier and quicker to do. So what I would also do in here is run these on individual stocks as well. And so you don't have to go and run it separately on individual stocks, but what you can do is you can put together a tag file which allows you to combine the stock symbol in addition to these ranges. And what will happen then is it will end up Monte Carloing together the entire list like we've just done, but then each individual stock against all of those ranges as well. So that's also interesting to do, because stocks do behave in different ways, and trying to find a system that works across all stocks and all timeframes is really impossible. But different stocks have different characteristics, and so you can definitely find stocks that this tends to work better on by doing that too. Okay, so example, at the end of a down day, next bar, sell at the low of the prior day, yeah, i.e. down day, and exit at the close of the entry bar. So 1 day holds, so basically holding from open to close. And can you test sell at the low of the prior day? Yep. You certainly can. You can put that into a script. And exit at the close of the entry bar. So yes, you can do that. You would set that up in your entries and exits tab if you wanted to do this manually, which is always a good idea to do the very first one of these manually, and then add it into the batch process or the batch template later once you've figured out it's going to work. And you've got all the settings dialed in. But yes, you could do that. You would have to change your scripts, and the scripts currently are under system scans. And if you search for LW _ I believe it is, you'll find these scripts. Okay, so the downrange down close do here. Downrange down close. If I just open that up, we'll find the code for detecting downrange down closes. Okay, it's fairly straightforward. So that's generating an event there. And so yeah, we'll take some scripting to generate the event that you're looking for. but it would be possible to do that. Of course, because you're looking at trading intraday, so at the low of the prior day, you don't know when that's going to occur. It's not at the open or at the close, which are the only two bars on the end of day data. There's 4 points of information we have, right, with end of day data. You have the open price, high price, low price, and close price. But we do know that if the range encompassed the prior day's close, that price did cross transition through the prior day's close. So we can write into a script that if we went to prior day's close, that we could take an entry on prior day's close. It's not something I wanted to get into, or I should get into on this live stream, but it's definitely something that can be done in the software. But it's a good question. Thank you. I'd be interested to know the results of that, for sure. Okay. Well, I think that this was reasonably successful as a live stream. And we'll try and do this again. Perhaps it's a little easier to do a live stream than to get a Zoom meeting set up and then have to register for a Zoom meeting and come on board and then look for the recording, etc. The live stream, it should all be, you can come to a live stream and check it out without registering, see the replay without registering, and it should automatically be there. After I finish this should be available on YouTube immediately for viewing. So with all of the what I would do though, and you probably end up with a much better production after doing a web meeting, is I would always download the meeting and do some editing and zoom into different parts of the screen, which obviously I can't do here on a live. So yeah, there's trade-offs, but I think interesting to try this, and would be interested to hear what people think about it. You can always send me an email to chrisw@edgerator.com, or go to the Edgerator website and enter your details into the contact form. I'll show you how to do that. Yeah, go to the Edgerator website here, and you can go to support, and you can go to contact us, and you can send a message that way if you prefer to do it that way and you don't have your mail running at the time. You just go to the web page and send a message. But that's it. Thanks, Paul. Can we schedule Edgerator to run a template? No. No, that's not currently possible. It's an interesting idea, and definitely thought about that. But currently, that's not one of the features. But I understand that the need for that. If you have a template that you run regularly, it would be useful to have that run automatically and just have it available as soon as you run the program. But currently, that's not a feature. But it's on the radar. Okay. All right, I think that's it. Thank you for coming to this, and we'll have a great weekend, and we'll see you next time. Okay, bye for now.